The ASX market has suffered one of the biggest weekly drops recently, and from Thursday, you can see that we have dropped around 6% in a short amount of 2 days, and today is Saturday after the market has closed, and we have rebounded a bit. So what I want us to really see through this is that I believe this is just a healthy correction instead of a change in the larger trend. So if you are investing for the longer term, please do not just go into the panic mode and do not be too influenced by the news. For instance, such as you see Australian share market shares rebound, but not enough to stop the worst week in nearly 4 months. So while this is true, do not just change your strategy or sell your shares because of this. So what we do is that instead of look at just like hourly changes or even daily views, what you do is you have to jump out of the cycle and see the larger degree. For instance, you start looking at daily, you will get a clearer trend. You can see that it was still rising up from November last year. So it's actually a rising trend for about 8 months now, and now it's only a correction. So I think this correction is going to correct this rise here from the November or October last year, and that's why it's now reaching the fourth wave here. So this is actually a triangle. It's a fourth wave of a rising wave in Elliott wave terminology. So it's possible that these either have finished the current correction or more likely because this has dropped to the 0.382 level, which means this is perhaps a wave A, and you will have a rebound to around here, 7,800 points or 900 points, and then finish the last leg, and then it will reach perhaps something around 7,500 to 7,400. Worst it can happen is we drop to maybe 7,300 points, but it shouldn't be going anything longer than 7,284 points, because again, this should only be a change in the trend. I should say this should really be just a correction rather than change of the larger trend. So it's only going to correct this rise here. To help us validate that, what you should do is you just go to the weekly view as well to look at the ASX 200 index. So you can see that this rise is even within this larger degree of rise as well from the COVID era, which is the March of 2020, where the market dropped 40%. So it was still healthy, as you can see here, right? And I think because of the condensed up and downs here, right, this is going to act as a very strong support. So you can see that this one has already broken through the support line here. So this is going to become a support in this case, the resistance, I should say, broke the resistance. And now it's supported. So even if it drops, it's going to be having a strong support and it will rebound afterwards. And definitely if you look at the monthly view, which is the strongest sort of the view you can see for a normal investor that is holding this for the longer term, you can see that it is also supported by the moving averages 50 and 200. As you can see here, even for the COVID or for the 2009 financial crisis, it has never dropped below, or it has never gone through the 50 support line. This is a EMA, by the way, and the green line is a 200. Therefore, it is still, as you can see, a very healthy rise. And therefore, I think the worst that could happen is perhaps with a small chance for the ASX 200 to drop to this support, the 50 support, the 50 EMA support. That is 7,129 points. But I don't think it will go there. What's more likely to happen is it probably dropped to, as what we just said, the this concentration area. So such as between 7,400 and 7,300, roughly around there, and then it's going to bounce back. So in this case, unless you are a day trader, I would suggest just hold on to this because market correction is very normal, right? And if you are here for the longer game, like myself, just and if you are holding the strong shares, just keep holding it and let the market finish its own cycles in a smaller degree, and it will bounce back and it will just continue to go up. And again, this is evidenced by the strong rising trend here. And given that we just had a very sharp drop during COVID, it's unlikely this will just repeat this large degree 40% drop anytime soon. As you can see here, the last time it happened, this has been like 09 to 20, so that's 11 years. So from a time cycle perspective, this is perhaps going to be another 11 years. So this is going to be at least 2030, like 2030, for us to have something as large as this. But during the meantime, as you can see right now, notwithstanding those smaller drops, even as much as 10%, it should rebound and going back. So do not worry. This is just a healthy correction, and we'll see how we go when we come back to this video, maybe in 3 months or 4 months' time. Thank you.